Hey there, happy Wednesday. We've got some major mortgage news and some housing updates today that could seriously impact buyers, sellers, and the entire real estate market as a whole. First thing to note, appraisal waivers are now available with just 10% down when buying a primary residence. That's a huge time saver. Another piece we'll touch on is that 1 in 7 home buyers are walking away from deals that are in progress. Mortgage applications just surged 20.4%. That's right, over 20% in a single week. Mortgage payments are rising again, how affordability is shifting, and the new FHFA leadership and what it means for Fannie, Freddie, and rates. So let's get into it. So, as we mentioned, appraisal waivers are now available with just 10% down. This is a huge change. You no longer need 20% down to qualify for the chance at an appraisal waiver. Now, if you're putting at least 10% down, you can skip the appraisal altogether. Well, what does that mean? Faster closings. You don't have to wait for appraisers to get out to the property, get the report, come to you, and potentially have to make any revisions. It avoids any, there's fewer delays. You're avoiding issues with possibly lower appraisals that are disrupting deals, and this results in smoother transactions. Buyers and sellers both benefit from this change. It could be a game changer in competitive markets where buyers need to move quickly. Now, as we mentioned as well, 1 in 7 home buyers are walking away from deals. Home buyers are backing out of deals at the highest rate in years. 41,000 home purchase agreements were canceled in January. That's almost 14.5% of all contracts. That's up from 13.4% a year ago and the highest January cancellation rate since at least 2017. Southern Eastern states are seeing the highest number of deal cancellations. Well, what's causing this? Higher mortgage rates. Buyers are still feeling the pinch of affordability. There's also economic and political uncertainty. Talks of trade wars, government spending cuts, and inflation concerns have buyers hesitating. There's also price fatigue. Some buyers are deciding to walk instead of overpaying for their property. Bottom line, buyers are more cautious than ever, and sellers need to adjust expectations. Now, while some buyers are pulling back, many others are jumping in thanks to falling mortgage rates. Mortgage applications spiked 20.4% last week. Refinance applications surged 37% in just 1 week, up 83% year over year. Purchase applications climbed 9% last week. The driver? Well, even though rates are high, rates hit their lowest level since November, dropping to 6.73 average on a 30-year fixed loan. Even with affordability challenges, buyers are ready to act when rates improve. And even though rates dipped, we kind of mentioned this, affordability is still a challenge. The median monthly mortgage payment in January hit $2,205. That's up 3.7% from December. Some states are seeing even bigger affordability struggles. Idaho, Nevada, and Arizona are feeling that pinch the most. Despite this, MBA is still forecasting a 16% increase in purchase originations this year. What does that mean? Buyers want to buy. They're just waiting for the right moment. Now, Bill Pulte, who was nominated to lead the Federal Housing Finance Agency, otherwise known as the FHFA, just laid out his vision. He wants to carefully end Fannie Mae and Freddie Mac conservatorships without shocking the market or spiking rates. He's prioritizing affordable housing and wants better use of the Housing Trust Fund. He's pushing for more housing supply, including expanding manufactured homes. The big question, however, is how will these policies impact mortgage rates and home prices long term? So, what to watch for this week? We have the Beige Book report that drops today, which is the Fed Insights on the Economy. Tomorrow, Thursday, the GDP and pending home sales reports coming out. And on Friday, the BLS Jobs Report. This could be a huge market mover, so be ready for that. So to quick recap, appraisal waivers with 10% down, quicker, smoother transactions. 1 in 7 pending deals are falling through because buyers are starting to get picky. Mortgage demand is surging. Rates are driving activity. The new FHFA leadership could mean changes ahead for Fannie and Freddie. So what do you think? You think rates are going to keep falling, or is this a temporary dip? Drop a comment below, let's talk, and I will see you in the next update.